Good afternoon, everybody. Should be live on YouTube, live on the virtual trading floor. Everything should be working properly. Be live on YouTube, live. So let's do it. Hey. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure here. I got stopped out of NEO today. I got into Airbnb today. Managed to keep a little bit of it even though it was tough. Yeah, market kind of did what we thought it was going to do today, which was be tricky. And that's fine. Let's talk about it. So at the close here, I'm looking at the SPYs, basically flat, down 0.08%. Qs flat. IWM, little relative weakness out of the Russell today, down 0.5%. Let's go over to the charts here. So I'm going to analyze this intraday action, but I want to start with the big picture. Okay, so we talked about this in detail last two afternoon meetings, so I'm not going to get into too much detail, but we had this break higher here, and we were kind of looking for that, or at least I was. A little bit of an uptick into the market. We were talking about, upper 370s, 380 as kind of a target one coming into this 21 EMA. If this breaks higher, it was notable on Friday that we had the false breakdown of the bear flag that the market had created for itself. We snapped right back up. We didn't actually fail on Monday of this week, but then we had a breakaway gap yesterday. That breakaway gap led to some solid, short squeeze action yesterday. It was an incredibly strong day. We pretty much closed at highs. I actually thought that as of yesterday's close, that short-term tactical sentiment indicator that I like to look at was going to be cooked to the upside. I was surprised to see this morning that it wasn't. But even with that, I felt that today was going to be a tricky day. We discussed in yesterday's afternoon meeting and again this morning different possibilities for what the market could do. I felt that the easiest situation for today's trading session would have been a gap up. If we could have gapped up from yesterday's close on highs into that 380 area, it probably would have been a layup for an opening short. And what I said in yesterday's afternoon meeting was a flat open or a down open would be trickier. We had a down open today, and it was a pretty sizable down open. Actually, we opened up down in excess of a percentage point. The SPYs opened at 373.40, so we opened up down here. So it's a pretty sizable gap. So the biggest thing I was trying to get across to you guys today was that it's a little bit of a tricky open, and yeah, we can look for some small time frame price action. Like I felt like an opening bounce would make sense just because of the type of gap that we were having. But really, what we need today more than anything is kind of a setup day. We had these two really big upside days in a row. And then that gap down this morning doesn't leave us with a lot of big picture opportunity. Again, small picture, we can analyze that gap down. We could, maybe look for, I think specifically what we talked about in the morning meeting today, and it worked out exactly like this, was looking for some sort of opening bounce because of the gap down, that common gap down, to see what percentage of that gets filled. And then as it approaches the small time frame equilibrium area represented by the 8 and 21 EMA, to see if you get some sort of pivot high that comes in that you could potentially short versus. And I think what I said in the morning meeting today was I felt, given the degree of the gap down and the need for a setup day after two really big days, that breaking yesterday's high today was lower probability. And that eventually actually did happen into the close. But it took an entire day of backing and filling and market pulling back and resting in order for us to actually be able to break up. So I think that the game plan was super on point today. One of my big themes of trading success that I always like to get across to you guys is to know when to be more active and to know when to be less active. Not every trading session is created equal. Not every day is providing you the same degree of opportunity. And I know one of the things that I've spoken to everybody about in the past is kind of the, I don't know if the right word is oxymoron, but like the trying to figure out almost like the juxtaposition between consistency being derived from doing the same thing over and over and over again based on rules to understanding that on certain days you need to be more active and less active, because it almost sounds like I'm saying two opposite things. I'm saying you need to be consistent by, kind of doing the same thing over and over again. That's where consistency comes from. Really, consistency comes from rules and following those rules consistently over time. That's the only, I'll take you even further half step back. The only way to be consistently profitable in the market is to approach the market consistently. The only way to approach the market consistently is to have rules for what you're doing and then to be able to follow those rules. So how can I, on the one hand, say that you need to do things consistent with the market, and then on the other hand, say that on certain days you need to be, really active because there's a lot of opportunity, and on other days you should be a little bit less active because there's less opportunity, and we need to see how the market sets up. You have to have rules that are telling you, based on your edge, when to be more active and less active based on the setups that are actually coming into the market. So that's kind of how you're able to justify that difference. So, coming into today, after a really big, 2-day up move, I think that what the market needs to reset up. So again, we can look for our little trades here, our scalping trades, or we can look for stocks that were in play that maybe have news or got upgraded or whatever that'll have a lower correlation to the market. But as far as like those big picture opportunities that I really like to focus on, we need the market to prove itself. We need a setup day. So coming into today, I'm more in wait and see mode. What is this market going to be able to show me? And I mentioned in the morning meeting today, like I'd love an inside day today. An inside day today, maybe even a second rest day tomorrow, especially considering, it's Yom Kippur today, so sometimes it tends to be a lower volume, slower type of trading session. That would be great because that would be the beginnings of a setup to see, all right, here's where we can break higher. These are the clear levels that we need to break, and, how we can make money from that, or the opposite, right? We easily could have, we had our gap down today, maybe have a little bit of a bounce back because of the type of gap it was, and then totally roll over to new lows, close on new lows, close near 370, testing that 370 level again, and showing us that the bear market here is just totally intact. And, the last 2 days were really just kind of a bear squeeze. Yesterday was, very clearly a lot of short squeezing going on in the market in the beginning of the day. So that's what I needed today. I needed the market to just kind of set up, show me its hand a little bit more. And at the end of the day, not too much has changed. We, still have our important near-term levels to pay attention to, which is basically SPY 380 on the upside and SPY 370 on the downside. I just realized I never turned this camera on. SPY 380 on the upside, SPY 370 on the downside. Those are the key levels to pay attention to. But one thing that I think is very notable about today is how well we closed. And I know we sold off a little bit into the close. The MOCs came out. We rolled over here a little bit into the close. But the market didn't need to do this today. It didn't need to get back to yesterday's high. It didn't need to get above yesterday's high, even if it closed a little bit below it. To me, that's a signal that there still is very real buying in this market, that it wasn't just a pure, 1 day breakaway gap, short squeeze, and then immediately the bear market is coming back in and taking us back down. So it's just a piece of information I'm paying attention to that I would put in the bull camp of things as we're kind of, resetting up in this area. So I would put that, again, factor on the bull side of things, but we still have to keep in mind this nasty downtrend that we are in, that we've been in. It's on multiple time frames. We easily could work our way back down. It's also why it ended up not being an inside day today. We broke above yesterday's high kind of in the afternoon. I would have loved an inside day today because it could have given us real good clarity on, if we had like an inside day doji type of thing, then, tomorrow or the day after tomorrow, if we're breaking above or below that inside day, that would be a very clear signal to me that this market's got, more buying pressure that's out there, and, maybe we start working our way up to the next level, which is basically 390 in the SPYs, should this 380 actually break, or again, an inside and down, creating a pivot high in the marketplace on the daily chart that we could, look for, continuation to the short side, or, stopping yourself out of your long swings, adding shorts on, whatever it is. So I think that today I would kind of give this one a vote, if you will, for the bulls, or on the side of the bulls, just because of the way that we recovered intraday. You know, going over to the intraday price action, again, off the open, we wanted to see if we could get like an immediate bounce here that creates like a pivot high that could potentially be shortable as these moving averages catch up to it. I would have liked this bounce to be a little bit more. I know I did call out, and you could really see it. The IWM was probably the best setup here for the short. I called out off the second 5-minute bar that you could look to short the SPYs or the IWM versus the tails that they were kind of putting in. I would have liked both of them, particularly the SPYs, actually to give you a little bit more juice on that bounce to really kind of, you know, tail up on the 5-minute chart into the ADMA on that time frame before giving that pivot. It didn't quite do it perfectly, but it was enough here where as this candle was coming down, I mentioned that you could short it. And then we were building out this wedge pattern here on the 5-minute chart over the course of the first half hour. It really tightened up with these inside bars. I still have the IWM up right now, but we could look at any of the indices. They were all kind of building out this opening wedge here for the first 30 minutes. And at first I was actually surprised that we didn't break down on this pattern sooner. I remember commenting at 9:50, 9:55 at about that time. My lights just flashed. Looks like there's a little bit of a lightning storm out, so I hope I don't lose you guys. I remember commenting here at 9:50, 9:55 about this wedge because we had the TLT just absolutely getting completely smoked here. You had the dollar, ripping up. The VIX seemed like it was acting stronger than the market was weak. So I remember looking at the market building out this wedge pattern. Again, SPYs, Qs, IWM, look at whichever one you want, and being really surprised that we weren't already breaking down. And I even commented in here, well, maybe the fact that we're not breaking down means if the TLT puts in a pivot low, the dollar puts in a pivot high, and the VIX stops ripping higher, maybe that's actually a signal that we could break higher. But, this is a bearish pattern, and I'm surprised that we haven't broken lower. And then, bam, right after I said that, there it came. We broke lower. So this was actually a second shorting opportunity. Your first shorting opportunity off of the bounce, we got the initial opening bounce that we were looking for. It gave that pivot high. Very obvious when you look at the IWM, and all three of these indices created this wedge pattern, giving those tightening inside bars here at the very end, right as the ADMA is catching up. You got the TLT working its way down, so interest rates are going up. The dollar, which has been such an important factor here for the market, also working its way higher, and then bam, you kind of get your next leg lower here in the market. So everything is looking pretty bad. And then I remember watching these SPYs battle 372. Really, the market can't lose 370. 370 is the real big level, and again, this tail from yesterday is actually not a real tail, so you need to, I don't know why my chart has this error. You need to just ignore this. We had a gap up yesterday. There was a lot of chatter about this being a potential island bottom. Well, if it's going to be an island bottom, you need those gaps to be maintained. And we actually broke into that gap. That's why I didn't want us to lose 372. But the line in the sand is really that 370. You start losing 370 and bull's got a real problem. And even losing that 372 made me very nervous because I'm like, all right, now we are... we're trading into this gap from yesterday. It's just a bunch of thin air there. Q's doing the exact same thing. IWM doing the exact same thing. I got this bearish pattern that broke down. Now we're starting to trend lower. Like this market was looking real bad on the break of this pattern, on the break of 372. But that line in the sand, that 370, was never actually tested. We started to kind of base out here. And then as the European market closed, we finally rolled up, kind of had a little bit of a rounded bottom or double bottom, however you want to look at this, on the small time frame. That then led to this, honestly, really impressive upside grind. And this impressive upside grind, the market didn't need to do this today. We were up like 5% over the course of 2 trading sessions or whatever it is, like 2 massive days in a row. The market didn't need to do this uptrend. The market could have been even giving a somewhat bullish signal by just staying in this 375 area, closing around 375. Again, not quite giving an inside day because we broke to the downside here off the open. But then, bam, this is just really impressive to me that this was able to happen at all to the degree to which it happened. and it tells me that, you know, there are some buyers that are still out there in the market, whether it's hedges being unwound or shorts being squeezed or real natural buyers coming into the market. It's probably not that. It's probably, you know, the first two at this point. But impressive that we were able to hold up. So this is what we want. And again, you know, going back to kind of the big theme that I'm trying to get across to you guys, I always like to be able to review, is knowing when to be more active and knowing when to be less active. And that's one of the big things that I always really try to get across to everybody in the morning meeting as best as I possibly can. You know, if I feel that there's a tremendous amount of opportunity, you know, I really want to, you know, let you guys know I think today's a day to go for it. And then on other days, and today was one of those days, I just feel like you're better off being selective, sitting on your hands, you know, taking stuff with less dollar risk or less tier size risk, and then, you know, seeing what the market can actually do, or focus on names that are specifically relatively strong or names that are in play. So, you know, as far as names that are in play goes, I didn't have any spectacular trades today by any means. You know, Snap was one that we were looking at for off the open. It gave a, you know, really strong opening momentum move despite the weakness of the market. And then it just totally failed. I could tell, and I was communicating it, that this wasn't right. Honestly, this pullback didn't feel right to me, but you still could have had this inside 5 and up that leads to new highs. But for sure, by, you know, 950, you knew that the trade was shot. I'll get to Neo in a second. I was planning on talking about that one too. So, you know, again, for sure, by 950, you knew that the trade was shot. But it was an okay trade. You know, we were on top of this very early. It sounded like that the people who were involved in it got really good pricing and low risk on it. So the move here up to $11.18 should have been enough for people to, at a minimum, be break even in the trade, if not make a little bit of money for themselves. And then it kind of, you know, failed because of the market and eventually rolled up and was strong. Airbnb was another one that I was looking at. This one totally failed. $111, you know, I was looking at. This got downgraded by one analyst. It got initiated, I think, with a buy by a different analyst. So you had, you know, two kind of competing pieces of news there. Broadly, I'm biased towards the company. I like Airbnb a lot. I use Airbnb all the time when I travel, but that obviously doesn't mean anything for, you know, a day trade. $111 is the spot I was paying attention to. It triggered through that real quick off the open. I actually cheated on it, and I communicated that. I think I bought like, you know, 110.60 or something. So I was actually able to sell a little bit of stock into this move, so it wasn't the end of the world for me. But if you didn't kind of cheat on the 111 buy that we had discussed, and you actually bought 111, you probably weren't getting your risk covered. You got stopped out of the position. This is when the market, you know, broke down on the wedge patterns, when Airbnb failed. You could probably see here with the volume increase on the break of these lows, there's probably a lot of, you know, day traders, you know, people like us, you know, getting stopped out of it. I kept the feeler in the position and kind of worked it throughout the day, and got a little bit lucky with, you know, kind of how well this thing actually closed at the end of the day. So I focused on Snap. I focused on Airbnb. I kept a little bit of Airbnb. I rebought this dip in NVIDIA. NVIDIA, I had already been in for a couple of days with a 130 price target. I got out of that yesterday. When the dip kind of came back into it, I was repurchasing some of my stock, you know, into this kind of, you know, rounded bottom into that area, and, you know, caught that move back basically to 130, liquidated that position. And then the only other, you know, major thing that I was doing here was Neo. So Neo was a trade from yesterday. That was you know, communicated from Cody on the team. Cody made me some good money in it. You know, worked pretty well, and it, you know, closed well in my favor. I decided to swing it. And then pre-market this morning, I was really impressed by the relative strength of the Chinese stocks. Neo pre-market was green, JD was green, JD opened green, was green all day, was really strong. Alibaba was green. The Chinese electric car companies, you know, XPEV, very weak today though. LI, kind of weak today. Neo, a little bit weak. Obviously, Tesla is weak, which is, you know, partially a Chinese electric car company pretty much at this point. And Tesla's got its, you know, own issues going on with Elon Musk and Twitter and everything that's happening there. But I was really disappointed with this Neo. It was certainly a focus for me. And I basically decided to create a game plan for myself where I still was swinging some stock from yesterday, but I wanted to put on enough risk and trade it in such a way where if I got stopped out, basically yesterday's low, I basically game planned to risk everything I made in it yesterday. That was kind of just the game plan that I, created for myself, and it still goes back to not turning a winner into a loser. I turned a winner into a break-even trade, which you could argue isn't great either, but I'm actually very happy with kind of the game plan that I made for it, and the trade just failed. So I created a specific game plan for myself where it's like, all right, I still have some stock from yesterday. This pullback happened off the open. I bought some stock at, like 1636, I think. I caught this nice bounce. I booked some profit into this up move. I think I sold, some stock in the mid 1650s. And then it rolled all the way back down, and I repurchased some stock again, and I added some more stock off that 16 off yesterday's low, and this thing just couldn't pivot for me. I took one more buy here, kind of back through 16 on it, put in a high of 1606, and it just failed, and it stopped me out. So, unfortunate. Pretty disappointed with this one. I like NIO. I like the company. I have friends out in China who own NIO vehicles who speak very highly of them. Again, that's just a thesis or whatever. It doesn't mean that a day trade has to make you money just because you know somebody who owns the car and they enjoy it. But I've always been a big believer in just paying attention to the world around you, because it can give you information. It can give you information and help you develop a big picture thesis on a lot of what you're doing. So, this NIO totally failed. I gave back some money in it, but I, wasn't going to fight it either. So I know that someone was asking about, when this volume came in, like if I was going to look to get back in it, and I just said, no, I'm done with it. I had my game plan. I got stopped out. I'm not fighting it. I was willing to give back everything I made in it yesterday, but I'm not willing to turn a winner into a complete loser. And honestly, if I wasn't aggressive with it, I was aggressive with it today, it would be a trade that I got stopped out of from yesterday that I'm still a winner on. And that just kind of goes back to the core principles that I'm always trying to get across about trading and money management. Don't turn a winner into a loser. Be game plan in such a way where you're going to put yourself in these win-win situations. And in this scenario, I specifically chose to be aggressive. And even with being aggressive, it just means that NIO between yesterday and today is pretty much a wash. And I'm fine with that. And this thing was even, stayed weak, and the bounce in this was a struggle even when the market actually bounced. So that was, pretty much it as far as my focus goes today. Like I said, I was looking for today just to kind of be a setup day, and we got that to some degree. We know our levels, 370, 380. Let's see if tomorrow those levels get breached, or if we get, a further tightening, a further kind of setup situation here on the pattern that the market and the big picture is developing. So that is all I got for you guys, and I am happy to answer any questions you guys have. Cool, no questions in there yet. If anybody's got any, feel free to type them into the chat, type them into the YouTube. From Avery here. Are there any books you have read that contributed to an increase of market trading knowledge and performance? Trading knowledge for sure. Performance, maybe, probably. I've always been, probably less so now, honestly. But for most of my career, I've always been a very voracious reader. I would read anything I'd get my hands on. I think a lot of you guys have heard the story about how, there was a time when I was a newer trader that I got access to, all these files of books, basically. And there must have been, 50 books in there. And I was just reading one after the next after the next. I was reading anything I could get my hands on, just to see if I could get one sliver of information out of it that would, help me understand the market or have better performance. There's definitely some that I always generally recommend. My favorite book on technical analysis is Technical Analysis on Multiple Timeframes by Brian Shannon. For market psychology, I like Trading in the Zone by what's that guy's name? I'm totally blanking. Someone remind me, the Trading in the Zone guy. Mark Douglas, thank you. A book that's specific to prop trading is One Good Trade by Mike Bellafiore. I like that. I like a lot of the principles he kind of lays out in that book. I never read his second one. So all that, and then there's been a lot of other books I read that I just thought were really interesting to learn about, like market dynamics. Like, oh man, what's the name of the book by the Oldensmith Barney guy? Wow, I'm totally blanking. He's got like a million finance books. His first most famous one is like his own story, basically. And then the one that I'm referencing is the one where he gets into high frequency trading. I'm probably not doing a good job describing this. Brian Shannon has a new book coming out on the VWAP, or a VWAP. Interesting. I don't use VWAP in my own trading. I totally can't remember. I'm totally freaking blanking. He's like the most famous. Yeah, thank you, Michael Lewis. He's like he's the most like famous like financial writer. Flash Boys, that's the one. I've read Flash Boys and a couple other books. The other one I can't remember the title of off the top of my head at the same time either. That really got into kind of the inner working dynamics of how markets work. That I thought were super interesting also, and just made me think about markets differently. I'm not going to say they added the same type of value as like technical analysis on multiple time frames by Shannon, but like I really enjoy just thinking about the approaches that these systems are creating that actually dominate the marketplace, and that thought process actually influenced kind of everything that I do to some degree, to be honest. Thanks, Bill. Thanks for sending that. Sure. What else, guys? What other questions do you have? No problem. Nothing? Short one today? I know it was like I said, more of a setup day. So a little bit I have not, Jerry. Little bit maybe less active today. So if you guys have less questions than usual, it's fine by me. I don't mind doing an early one, but also have no problem sitting here answering anything else, any trades anybody took or broader questions that people have. Happy to get into it. Give you guys about another 30 seconds or a minute to put anything in there, and otherwise I'll wrap it up. For Mike, I tried Chewy and Tesla along early in the morning. Oh, that Chewy was actually a solid one today. I didn't capture it, but I know we chatted about some of the setups in this a little bit. Just a sick move in Chewy. Chewy and Tesla long early in the morning, right before the market dump, and ended up stopped out of both. I was upset I didn't pay more attention to other signs that you were pointing out about possible market weakness, such as the VIX and the dollar. Any advice how to psychologically reset from 2 failed trades in a row like that? Yeah, so for sure. I guess, just initially, comments on your trades. The market is just such an important layer of probability that you really always need to be very focused on what the market is telling you for any individualized trade that you're actually, getting into. And the market, especially this morning, was really just kind of not on our side for the trades that we were, looking at. And that kind of goes back even to the game plan that we created this morning. If you are going to be focusing on something, though, you want to be focusing on something that's in play or has unusual volume or had some news. Chewy fits that bill. The Chewy chart here, the volume was unusual off the open. It looked like it was squeezing. I don't think there was any particular news in it, or at least there wasn't that I saw. Maybe somebody correct me on that if I'm wrong. But this is the right name to focus on, because this could trigger the lower correlation of the market just because of the volume and the fact that clearly something was happening with it. So it started to create this kind of bull flag pattern here with an inside bar. The ADMA hadn't quite caught up to lows. We talked about taking a long here on the break of this inside bar. I mentioned that you could just use the low of the inside bar as your stop, which is like 34, 39, 34.40. But that my preferred stop on this would actually be all the way down to this low here. And the reason for that is because I don't like having my stop losses above the 80 MA on the 5-minute chart as a general rule, or above the I don't like my stop losses basically just being above the 80 MA on the time frame that I'm looking at for the trade, which in this case is a 5-minute chart. So that trade totally failed. Part of that's market related. You can see here 10 a.m. we know is when the market had that breakdown of the wedge. So you can see that's when you got that bigger downtick here, even with Chewy, which is trading with this good volume. So this was the right approach. Because the market is against you or not with you, I support taking this trade fully. I just don't think it's a trade that you go like your full max risk on. I think that you pull back on your risk parameters a little bit with this trade, your overall dollar risk on this trade, as far as like risk skew goes, because the market's not on your side. But if you took this Chewy and used either of those stop losses and this thing pushed you out on the way down, I think it was a really good trade. And we just kind of know in the business that sometimes you take good trades and they don't work because we work in a game of probabilities. So that's Chewy. Tesla, on the other hand, this Tesla was really tough. I mentioned I wanted nothing to do with trying to buy Tesla today, even at 340. 340 is a big daily level, and actually, I did call this trade out. I said you could take this inside bar trade here for Tesla in either direction. You could take it to the long side, even though the stock is very relatively weak, because 240 is a daily level. You could take it to the downside just because it's like one of the worst stocks in the market right now, and you could just be looking for trend continuation on it. So if you took that trade, I think it's a good trade too. This thing, all it needed was a snapback to the 80 MA, to the lower band of equilibrium on the 5-minute chart, and it's 10 a.m. It should be able to happen off of a daily support level for you to be able to get your risk at least covered, and then maybe that upside retracement kind of becomes a reversal or whatever. It just didn't happen. So I think that both of these are good setups. I like the Chewy setup better, but if this is where you took your Tesla trade, I think that those are both good trades. So now to the next part of your question where you're asking about psychology, a big part about trading success, and I've discussed this in the past, and this is like one of the hardest things, especially if you're a new trader, is recognizing that sometimes you do all the right things and you lose money, and sometimes you do all the wrong things and you make money. And that can really mess up your trading psychology, because what you end up learning sometimes is that the right thing is the wrong thing and the wrong thing is the right thing, because we're so results oriented with what we do, and we have a recency bias, with our trading. So the thing that you'll really want to focus on doing, especially when you're doing your journals after the market closes and things like that, when you're doing an honest review of your trades and the P&L's not moving anymore and the day is over, is to really ask yourself, did I do the right thing? Did I take good trades and they just didn't happen to work? Or did I do the wrong thing? And not be totally result orientated. Be focused on, was my process done and correct in such a way where I'll be consistently profitable in the long run? And I think that if the Chewy trade and the Tesla trade are the two that I just referenced, that you're doing the right things. And that's a big part of a psychological reset, is being able to say to yourself, like, hey, I'm doing the right things, it just wasn't the right day, and I'm just going to come back in tomorrow, I'm going to continue to do the right things. One of my mantras that I like to say all the time, all I need to do to make money trading is to do the right things consistently over time. That's it. If I do that, I know I'm not going to make money on every trade that I take. I'm not going to finish positive on every single day, but I know that in the long run, the numbers are going to work out in such a way where I can make money for myself. So I think that's really what it comes down to, is being able to have an objective view of your trading and getting, kind of past your emotions on it. And then a big thing is just to always be able to approach every trade and every day as a unique trade. It's very easy, especially intraday, to let that last trade or let your current P&L, things like that, actually affect your thought process and decision-making process for the next trade. I hear it from traders all the time that I speak to, individually, who say, oh man, and then this happened and all of a sudden I was trading defensively. You should never be, trading like defensively or offensively. I mean, maybe you should be kind of based on what I was saying in the beginning of the meeting today about some days the market's giving you more opportunities and some days the market's giving you less opportunities. So one day you should be more aggressive and one day you should be more defensive. In that regard, you should be more, aggressive and more defensive, but it should never be like your P&L or your last trade or things like that are making you defensive, right? Because at that point, if you're trading defensively because you're down money on the day, you're probably just setting yourself up to lose more. So, you know, you got to trade the trade. And that's another thing that's really important. I spoke to somebody recently about, like, you know, I spoke to a couple people actually recently about not just using like a random amount on the downside, you know, like 10 cents or $1 or 50 cents or whatever as your risk. Let the market tell you what your risk is supposed to actually be on the trade. Listen to the market. Follow the market. Don't, you know, trade from yourself. So, yeah, and for sure. And if you feel off, which we all have our off days, take a step back. There's nothing wrong with doing that. That's also why we have our like limit down rules, our maximum loss rules for a day, is because we all have off days. You're having an off day, you get your max loss, stop trading. Don't fight to make it all back, because every once in a while you make it all back, but more often than not, you're just going to dig yourself into a big hole, and that's not proper money management. So there's nothing wrong with taking a half step back. This is why we have, again, rules, but these are now rules that we're talking about in regards to money management, risk management on the downside. And knowing yourself is a huge part of it. You know, there have definitely been times in my career where I was, you know, maybe a little hungover one morning and, you know, wasted a whole bunch of money because I traded like a jerk because I was just like not feeling right and not seeing the market right or whatever it is. Don't do that. Learn from my mistake. From Matt V. For swing trades, do you look for swing setups or turn day trades into swings after the risk is covered? Primarily the second. Primarily the second thing. That's what I prefer to do. I love for swing trades to start as day trades. Then when you're well in the money, when you're looking to maximize reward, you keep that position overnight and see, hey, this thing looks right on the daily chart. I'm in the money on it. It started as a day trade, and I'm trying to leave my upside as you know, unlimited as possible. And you are, you know, keeping that position going. That's how I love doing it. I really am against holding positions overnight that are against you, even if I do it a little bit once in a while. Usually if I'm doing that, it's because it's a pure feeler, very small position. You know, professional prop traders, traders who have leverage access, if you're holding a position against you, you're usually putting yourself in that risk your life for no reward situation, right? Where you're going to be able to, you'll still be there for all of the downside that overnight risk could give. But as soon as like you're break even, you're probably going to be liquidating the position. That's not setting yourself up for success. You know, good traders looking to do the exact opposite. You know, have minimized risk for maximal reward. But in practice, it's very easy to do the opposite. Say, you know, I'm just going to average down until I'm able to be break even. I spoke to somebody else about that recently. It's not going to work, especially in an account where you're dealing with, you know, a lot of leverage. No problem. Mark likes his bourbon. I am also a fan of a good bourbon. From Sebastian, do you know any reasons why there was that big candle at 11:05? I don't have a big candle at 11:05. After the market broke down and inside 15, you're looking at the 15-minute chart? Are you talking about 10:05? I think you're talking about 10:05. I think this was just pure technical. This is just pure technical. You were shorting some things since it seemed to me like the market was going to reverse again and have a 15-minute retracement. So if you shorted some things here, if you're talking about 10:05, which I think is what you're talking about, obviously that's a good trade. This is just purely technical in nature. There's a technical pattern that kind of came in here with this wedge, with these inside bars, the EDMA catching up. That wedge broke to the downside. 12:05. I have no idea. I have no idea. At a certain point here, these are probably short sellers intraday that are getting stopped out. I don't, like I was saying earlier, I don't really know what woke this market up here. Like I said, today was more of a take a half step back and watch type of day to see the information the market provides. The VIX made a leg down at that point too, so that, you know, kind of confirms it a little bit. Vic's making a little bit of a leg down there. I just think it goes back to what I was saying earlier, that this is a setup day for the market. It's a day to kind of do less. And I understand wanting to push it to the short side, and if you were short early, then you're just managing your risk and you get stopped out of it. But again, today was a day I think to do a little bit less and to just see how bigger picture this market's continuing to set up. So I think that it's just a matter of the market breaking higher and kind of reversing the opening downtrend and resuming to the upside. I really think that's it. Okay, gang. Looks like we got through everything, so I will end the meeting there. I hope everybody, had a good day and managed their risk, and I hope everyone enjoys their evening, and I'll see you all tomorrow. We got one more question sneaking in from Pete. When you go long off the open and then the market turns, do you stop out or average down? Depends on the game plan I had going into the trade. You should know your stop loss before you enter the trade, right? So if the market's going down, it turns against you and it's going down and you get stopped out because that was your game plan, you get stopped out at that price, that's what's supposed to happen. Or if you're giving it more space and you're averaging down, that should also have been part of the game plan before you entered the trade. I'm buying some stock here. My stop loss is all the way down here. I understand if it pulls back a little bit, I'm going to look to add for less risk and average down on it, but I'm doing it in front of my stop loss. Averaging down is generally only okay if you're doing it in front of a stop loss. Otherwise, averaging down can just be a recipe for complete and utter disaster. But I think the entirety of your question goes back to game planning. And the more I've been in this business, the more I see that it's all about money management, risk management, and game planning. That's what actually creates the consistency that enables you to be consistently profitable. I got Hemming sneaking in one more question. You missed an opportunity in Apple. You missed an opportunity when Apple broke 146. I know you asked me about that too. You asked me about going long Apple here in the afternoon. 146.70 is late. I just think you're late on the entry. If you're taking this trade, your price shouldn't be much worse than highs. 146 quarter or so. So you're late on the entry. That puts you in a much worse risk reward. I don't like doing it. Most of the time, I'm not going to say always, but most of the time I would rather miss a trade entirely than be late. It's also late in the day, like Rich is mentioning here. The trade's a little bit late in the day, so it helps limit your reward a little bit if it's just going to be a day trade. That's not the end of the world. You could take some kind of evening scalps if the market's breaking up or whatever. But again, I guess going back to what Rich is saying, if you're taking even all this additional risk because you're late and you only have an hour for the trade to play out, that's difficult also. Does the pullback at 15.10 count? That'd be a different trade. So the intraday breakout occurs here, and that was the trade that you're asking me about. Then it gives you an inside 5. So you could take this inside 5 to the upside here, but that would be a second trade. And I always prefer to be involved in the first trade whenever possible. But the second trade here, it's still a trade. So you could have taken that as a trade. You could have taken that as a trade. But I don't like just buying 50 cents late on your actual execution here, or that would almost be like chasing this at 147 quarter because this broke down here at 146.90. It's just generally not going to work for you in the long run. Execution's key. Having good execution, I find personally that being break even on trades is very easy. Going back to the game planning that we kind of always discuss, buying your stock and getting your kind of one-to-one kick and getting your risk covered on positions. I find that if you have good execution on your ideas, that it's generally very easy to get one-to-one on it and be able to get your risk covered. But that's why good execution is so important, because you could show me a trade that I executed well and you executed poorly, and I could be break even on that trade or even making money on that trade, even if it's a failed trade, and you're just taking a pure straight loss because your execution wasn't good. So that's why execution is also really important on your ideas. All right, gang. Have a great night, everybody. I will see you all tomorrow.